up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or stock you want to go over together live, leave it in the comments section. We'll do that together. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, good morning, everybody. Happy Wednesday. Let's check in on our open positions. Market overall is slightly down today. SPY is flat. Russell 2000 is flat. So all of our positions are short call spreads for January expiration, about 30 days out. 30 days out. Dow Jones ETF short call spread down about $34 overall. That's fine. Roku's fighting back, trying to get to 34. We rolled this one from December. So far, so good. AMD down $12. That's fine. SPY as well. We rolled that one from December expiration to January. Again, the whole spread's underwater, but we've got 3-4 weeks. We can always roll it again if we have to. IDM Russell 2000's down as well. Same thing. We've got time. And XBI down big, but we're also same thing. Waiting for it to pull back, which will happen hopefully by the time we get to January. Okay? First up today is FedEx, FDX. Down post earnings, 10 or so percent. Bouncing here off the 200-day. Wow. The post-pandemic move was crazy. All right, let's get the put side for both January and February expiration. For January, if you sold the 235 and bought the 230, we'll get calculators out. It's 160 minus 99. Divided by 2, divided by 500. That's 6.1%. I kind of like that one. Liquidity on this one is okay. You're going to have about a 20-cent spread on the overall trade. That's not ideal, but it's manageable. What about February? February. Liquidity is about the same. You'd have to sell the 220 and buy the 210. You're not going to get paid for it. 60, maybe. Hold on one second. 125 minus 62 divided by 2 divided by 1,000. 3%. So you want to do this one. Put side, January. What about the call side? If you sold the 270 and bought the 275, 151 minus 104 divided by 2 divided by 500, 4.7. So you get paid more to sell the put side. And that makes sense. It's down 10% after earnings. Everything in this one for me looks great. The only thing that concerns me is it's a 10-cent spread here, 7-cent spread here. That's okay. If it goes against us, it'd be hard to roll this one if it gets deep in the money. Where's 235 on the chart? $235 is right about here. It's awfully close too. All right, we'll keep FedEx on the list. Let's check out UPS. Have some ping action here. They're down slightly, but they're come rallying back. I think their earnings are at the end of January, at January 30th. Put side for January. If you sold the 149 and bought the 145, $61 minus 29 divided by 2 divided by 400, 4% there. It still makes more sense to sell the put spread on FDX. Moving on, DraftKings DKNG. Let's see, I think they're in the news, either upgrade, downgrade. Nothing here. Put side. You sold 31. Let me go back to the chart really quick. Earnings are in February, so that's fine. Chart. Big support down at 10 and just a slow grind up. Could have a pullback here and then continue the grind up around, get a change support around 30. Let's look at the call side actually. Call side for January, if you sold the 40 and bought the 42. 45 minus 23. Divided by 2, divided by 200, 5.5% there on the call side. That's not bad. What about February? If you sold the 43 and bought the 47, yeah, 47. 82 minus 39 divided by 2 divided by 300, 7.1. Is that right? $400, sorry. 5.3% there. Okay, I think we can find better. General Mills, GIS, post earnings today before the open. Looks like a gap down. It's already rallying back. I think there's a move to be made here. Put side. Looks like it's too illiquid. Yeah, 15-cent spread. Not a lot of volume. We'll move on. Tesla. I think there was news out today about Tesla's autopilot recall, or just recall in general. Battery partner scraps Oklahoma plant. That's right. Earnings are January 24th. You can make a case for selling a call spread here. Yep. Let's check it out. Call side for January. If you sold the $295, bought the 300. 305 minus 249 divided by 2 divided by 500, 5.6. If you go out to February, selling the call side, sell the 310, buy the 315. 527 minus 462 divided by 2 divided by 500, 6.5% there. This would include earnings though, right? Yeah, so I'll stay clear of that one. What about put side for January? $230 is a little close. Still at 230, bought the 225, or sell the 225, buy the 220. Let's do that one first. 211 minus 155 divided by 2 divided by 500, 5.6 there. $225 in the chart. It's right about here. I'm not crazy about either one of these. Let's keep going. DocuSign is next. DOCU. Downgrade maybe. What do we got? Post earnings here. Wells Fargo downgrades DocuSign to underweight. Next earnings are in March. Had this big pop after earnings, and now it's kind of like just chilling. That makes sense. Higher high, lower high, slightly lower high. For January, a little illiquid. You'd want to sell the 69, but spread is 20 cents here. You'd buy the 74, spread's even worse. Put side, a little better on the put side. If you sold the 54 and bought the 50, no, pass on this one. Maybe February slightly better. Now 70 is too close to sell, and 75 is too far out. Put side, same story. 38.106. Spreads are too wide. Okay, next. Costco, downgrade, I believe. North Coast Research downgrades Costco. Earnings are in March. Got this big wind-up parabolic move here. Near all-time highs. You can make the case for selling a call spread here. Call spreads on everything. January, selling 700, buying 705. What about February? No, hardly any volume here. Pass on this one. Close, but no cigar. CRM is up next. Salesforce. Microsoft as Wells Fargo's. There we go. Wells Fargo downgrades Salesforce to equal weight. Price target of 280. Earnings are March 6th. Okay. Where did you got resistance here? Your next batch of resistance is around 283 up to 297. If you sold 280, bought 285, what do you get? $158 minus 598 divided by 2 divided by 500, 6% on the nose there. This one seems more convincing. 9 cents spread here, 9 as well. It'll be tricky, but it's doable. 280 on the chart. $280 is right here. Let's go out to February. We sold the 290 and bought the 300. That's $1,000. 201 minus 101 divided by 2 divided by 1,000. 5% right on the nose. We'll come back to this one as well. Next up will be Zoom. Down 2% today. Liquidity looks better on this one. I think they had a downgrade as well. Wells Fargo is on a roll today. Downgrading Zoom to underweight. Price target of 70. Earnings are February, end of February. It's just range bound. It's at the higher end of this range, going back towards August of 22. Call side. If he sold 78 and bought 81. 67 minus 39 divided by 2 divided by 300, 4.6. On the put side, if you sold 65 and bought 61, that's 54 minus 21 divided by 2 divided by 400, 4.1. Seems to be fairly balanced on both sides. February, going out to February. Put side, sell 60 by 55. Not going to be worth it. That one's perfectly priced, though. I can see it already. 51 minus 22 divided by 2 divided by 500. Yeah, no way. Call side, I'd skip the call side for February. All right, moving on. Let's follow up with some from earlier this week. End phase will be first. ENPH. Earnings are February. This thing was on a tear. What's the call side look like for January? I'm going to go all the way out to the 157.5 and buy the 162.5. Not a lot of volume, though. What if we sold the 160, bought the 165? 230 minus 177 divided by 2 divided by 500, 5.3% there. Not really. We need another strong day up. Let's go back to the chart really quick. If we had a day like yesterday, another strong day up, say tomorrow or Friday, then sell the call spread. Down 1.5% today has kind of killed the volatility. You'll get a better percentage if there's another strong day up. So let's hold on this one. Checking on Boeing. Down slightly. Boeing could be topping out here. Looking at resistance at 292, worst case scenario. Call side for January. Sell the 285 by the 287.5. What if we went out to February? Call side for February. Hardly any volume, man. You sold the 295 and bought the 300. That's 295 minus 231 divided by 2 divided by 500. 6.4% there. 295. This is February, though. 295 is right about here. And that would be February expiration, so about 60 days. It's an idea. Let's keep moving on. Newmont. How's gold doing today? Call side for Newmont. Earnings are February 22nd. Here's our chart. High, lower high, possibly lower high now again. Call side if you sold the 44.5 and sell the 47.5. It's not very, it's a baby spread, $200 spread. 39 minus 19 divided by 2 divided by 200, 5% on the nose. What about February? Sell the 47.5 and buy the 50. 53 minus 28 divided by 2 divided by 250. 5% there too. Would make more sense to do January then. Some ideas here, just nothing's really crazy. Etsy, ETSY is next. Following up from yesterday, I think. Earnings are at the end of February. Here's our chart. Trying to get to 100 I put down. Yeah, that makes sense. Call side for January. Skip. 95 is too close to sell. 100 is too far out. February. When are earnings again? Sorry. End of February. So we can go out to February without having to deal with earnings. You sold the 105 and bought the 110. 149 minus 98 divided by 2 divided by 500. 5% there as well. End of the year, lack of volatility, making things a little tricky. Next week is going to be slightly worse as well because not much is going to happen. Let's look at the TLT. Up again, I believe, today. Barely. On the call side, for January, if you sold the 103 and bought the 106, $300 spread. 61 minus 25 divided by 2 divided by 300. Is that right? 6%? Maybe I messed up. Selling 103, buying 106. 61 minus 25 divided by 2 divided by 300. And 6%. Okay, I think I'll open that one. Where's 103 on the chart? One hundred three is right here. It's awfully close, but it's the bond market ETF. Long end of the curve. And we have January expiration, so that's what, in 3-4 weeks, 30 days. Let me just check out February really quick, and then I'll place this one. 106, selling 106, buying 109. 76 minus 43 divided by 2 divided by 300. 5.5% if you sold February. So it makes more sense to sell January, which I think I'll do. Selling 103, buying 106. Okay, $300 wide spread. Go to verticals. Set this to 3, already is. Looking at the 103, 106 right here. Go back to 38. 38 divided by 2 divided by 300. Yeah, looking for 6.3%. So we'll sell one January expiration of the 103 call and buy one January 106 call. Credit of $38. Let's preview this. Double check the ticket. Sell one 103 call to open, buy one 106 call to open, January expiration, receive a credit of $38. Go ahead and send that out. I'll hang out here. If it does get filled, I'll set a buy to close on the spread for 18, right? $19. I'll set that as good till canceled. Okay? Going back, where's 103 on the chart again? 103 is right here. That seems fair. All right, cool. Let's move on. Affirm. Did we do Affirm yet today? They had the partnering with Walmart a day or two ago. Furman Walmart, yep. Post holidays, this thing's going to fall apart. Earnings are February 7th. Here's our chart. Resistance, strong resistance right around here. From back in 21 and January 22. If not, up to 72. Okay, call side. I think the shorts are just getting squeezed here. Hold on one more second on the chart. 18 to 50. That's one hell of a move. From $17 to 50. Call side. For January, if you sold, we sold the 68 and bought the 73. It's kind of far out though. 135 minus 98 divided by 2 divided by 500, 3.7% there. You can go closer. Sell 64 by 69. 181 minus 128 divided by 2 divided by 500, 5.3% there. That's not that great either. Put side. You got to go out and sell 38 by 34. 70 minus 33 divided by 2 divided by 400, 4.6 there. Let's check out February. February is going to be tough. You'd have to sell the 70 by 75. 302 minus 234 divided by 2 divided by 500, 6.8% there. Earnings, though, are February 7th, so that's why. Earnings are included in the volatility of this one. You see how February is higher than January. That makes sense because it includes earnings. I think we'll hold off on this one. Next up, let's check in with gold, GLD. Volatility is still slightly heightened, slightly. For January, call side. For as of right now, I have no bias on the call side or the put side, so let's see what's paying more. If you sold the 195 and bought the 199, 93 minus 45 divided by 2 divided by 400, 6% there. Put side. Still a lot of call skew. If you sold 182 and bought 179, $36 minus 16 divided by 2 divided by 300, 3.3% there. February. Still a little early on February. If you sold on the call side 198, sell 198 by 205. 150 minus 66 divided by 2 divided by 700. That's 6% there as well. So if you want to sell anything, sell the call side, but where's 198 in the chart? 198's right here. That seems very fairly priced. I don't think I'll hold on this one. Again, I'd rather for gold to make an all-time record high and then go ahead and sell a call spread. I'd hold on this one still. checking the KRE. Looking for it to get to 56. Looks like it's not there yet. Getting close though. Why 56? Oh yeah. Should hit some resistance around 56 or so. 56.30. Now it's at 53. So we got another 6% to go. I'll hold off on this one. Call side for January though. You'd have to go out and sell the 58 and buy the 60. 41 minus 21 divided by 2 divided by 200. That's 5% right there. February. 59 is a little too close, and the 60 is a little too far out. We sold 60 and bought 63. 62 minus 31 divided by 2 divided by 300, 5.1% there. Maybe. What time are we at? 45. All right, let's very quickly go to IV rank scanner, sort by volume. See if there's anything worthwhile. IWM is back up to 54. Let's check in with that one really quick. Looks like it's up right now, almost 1%. Where's our spread? Our spread's right here, both legs underwater. We got some time. Waiting for January. Could catch a resistance right about 202. I'm getting close to that. Well, we're at 202. Call side if you want to open something for January. I would sell the 214 and buy 219. $126 minus 65 divided by 2 divided by 500. Yeah, 6.1% there. That's not bad. Wish I could make that trade now. Put side. If you sold the 191 and bought the 186, that's 99 minus 55 divided by 2 divided by 500, 4.4. So you're getting paid more to sell the call side. Call skew. Okay. Couple more, then we'll call it for today. Marathon. FedEx post earnings. We'll check in with FedEx one more time, and then call it. Coinbase, pass. Coinbase, I wish I could sell the call side. It's just not enough liquidity. Emerging market ETF. Riot, Affirm. We already looked at Affirm. Pfizer. Nope. Micron has earnings today after the close. That's cool. We'll follow up tomorrow. CVS. They have an event on the 8th of January. Let's check out CVS. CVS, follow up on FedEx and call it. CVS Health to present on January 8th. Okay, earnings are in February. No ceiling until 79, then 82, then 84. Look at the put side. He sold 73 and bought 70. 51 minus 21 divided by 2 divided by 300, 5% on the nose there. Call side. He sold 83 and bought 86. 48 minus 16 divided by 2 divided by 300. 5.3% there as well. Fairly priced on both sides. Go back to FedEx and call it FDX. Looking at the put side for January, selling 235, buying 230. Liquidity's okay. 158 minus 97 divided by 2 divided by 500, 6.1%. Maybe I'll open this one as well. Selling the 235, buying the 230. Actually, never mind. Liquidity just sucks on this one. If we went out to February, we sold the 230, bought the 220. It's 237 minus 126 divided by 2 divided by 1,000, 5.5%. And then 235 in the chart. A little close, right? It's right here. How about we follow with FedEx tomorrow? FedEx is another down day close to the 200-day moving average, and then we'll pull the trigger. FDX. All right. Recap: if TLT gets filled, 38 divided by 2. We'll set a buy to close order, good till canceled at 19 cents. Okay, that'll do it for today. Thanks so much for watching. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Tell your friends as well who are trading to tune in. We'll all trade options together. Have a happy Wednesday. See you all tomorrow.